it makes sense. I mean, logically, right? You're looking at a market of inexperienced or a sample of inexperienced traders. You're
Mhm.
trying to go against them when their sentiment is at an extreme.
Welcome to the Think Profit Podcast. All information in this podcast is for educational purposes only and is not financial or health advice.
Hey Hugh, I have a question from a trader here he knows that I use the open position ratios. So I like to look at what traders are doing, especially retail Forex traders, when I take Forex trades. And so I use IG markets uh, because two reasons. They update their open position. So open position ratios are just what percentage of traders are buying or selling this market. Okay. So they say the euro pound is 47% long. That means 47% of their traders that are trading the euro pound at the moment are buying euros and selling pounds. And I guess that would be 53% of the traders would be selling euros and buying pounds, right? Uh, so it's really like a live real-time update on the trades. And the reason I use this is because we know from other data that retail traders largely will fade a trend. So they'll see the market jump up and they'll want to sell, or they'll see it fall and they'll want to buy. And so when I see a large percentage of these traders all on one side, it just red flags it for me that maybe this is a good market to trade a trend. It doesn't mean that it's always the case. In fact, I find about 1 out of 11 times it'll be wrong. In other words, all the traders are going with the trend, but almost always they're not. And sometimes it'll be a choppy market, even though the open position ratios are out of whack. And I like to see them go over 70% before I would get in on on the opposite side, right? So this trader is asking, would you um, do you use the live updated numbers? And the answer is yes, because IG markets will update them every 10 minutes. And they have a lot of currency pairs that they offer the data for, so that's why I like them. And they also have a pretty good chunk of the retail market. So I think they're a good representation of the retail market. So that's why I like them. And I wouldn't use things like MyFX Book or somewhere where you have more traders who are a little bit more savvy. I prefer to use a broker like IG who has a lot of newbies in there. I think that's more useful. Yeah. So yeah, and so his question is, would you ever take a trade if the open position ratios weren't? Because I use them as a tool. It's not the only tool, but like I said, it's like some people use moving averages to determine trend strength or ADX or whatever. I like to use open position ratios to determine the strength of a current move. And so his question is, would you ever take a trade without them? The answer is yes. If I were trading a range bound market that was in a channel or a box and bouncing around off the top or the bottom of the box, and the open position ratios were relatively neutral, I'm happy to take that trade. But if the market's roaring and going up, and I have really negative, really bearish open position ratios that suggest that I should be selling. For example, that recently happened on the USD Swissy. USD Swissy was making a move up, and the almost the entire time, the numbers on the open position ratios were actually bearish. So I did not jump in on that move. And if you zoomed out, you could make the case that move that was going up was simply just a long, drawn out retracement move on the overall downtrend. And so I had it tagged as, it's going to hit this level of resistance and it's probably going to fall there. It did hit that level of resistance. In fact, it's hit it 3 times now, but it hasn't quite fallen yet, right? So for me, I don't mind trading neutral open position ratios if I have like a neutral looking sideways market. However, if I have a trending market, I really want my open position ratios to go in that. Do you know what I mean? Like to complement that. And I certainly wouldn't take the trade if my open position ratios went against what the chart shows. Ideally, they would both line up, right? So we'd have, 85% of the traders are buying the USD Swissy, and so I want to be in the 15% that are selling. And right now it looks like it's hitting a reversal, like making a double top. So I would get in a trade like that. So that's my approach for open position ratios. A lot of traders don't understand them. They think it's sentiment. It's not sentiment. It's actually trades on. So it's literally a screenshot of the trades that are currently on for that market at that broker. And you can get them from many brokers. Many brokers will offer them, many websites that have the ability for you to connect your account, like I said, like MyFX Book and places like that. You can do it. So I'm just curious, what's your take on that? Is it a tool for you? Is it something you don't look at? You do look at? You've tested? You haven't? What are your thoughts on that?
Yeah, I've looked at your tool for a little bit. I just couldn't get like enough historical data, so I just didn't really back test it. But it makes sense. I mean, logically, right? You're looking at a market of inexperienced or a sample of inexperienced traders. You're trying to go against them when their sentiment is at an extreme. So that makes sense. My question to you is, what about your exit? What do you use for an exit? Is it technical or is it based on the open positions also?
Well, no, my exits are technical, but what okay, so you bring up a good point. First of all, you can search um price versus open position ratios, and you can see usually it's a line chart, and you can see the correlation, which is almost always a stunning negative correlation when you see it. It's literally
Mm,
like they're magnets, like they're repelling. Number two is I post a bunch of videos in my forum, and when I post them, for the last many years I've had the open position ratios, so it would be a very tedious but possible process for you to go and get that snapshot of the open position ratios if you're like back testing, the pound in 2019, right? It is possible for you to do it, but I will admit it's tedious. Um, just like it was tedious for me to backtest the news trading system that I use on the 5-minute charts with the non-farm payroll, because I had to go back and see all of the numbers that dropped. You know what I mean? Like 10 years ago
mhm.
on the non-farm payroll. But it is possible to do that. Um, so yeah, so that's that. But yeah, your point is well taken. I don't use open position ratios to get out. However, I will note that it's very interesting to see how they fluctuate. So let's say that we're in an uptrend and we've bought, right? And so your open position ratios tell you that, all the traders are selling. It's 75% of the traders are selling. So you want to be in the 25% that are going long this uptrend, right? So then what happens is when you have a normal retracement on that uptrend, um, the open position ratios will fall off. So what I mean by that is that those traders who have shorted the uptrend and decide to sell into the teeth of the uptrend, they get a little retracement move, which is either reducing their loss or offering them a little bit of profit. And that's where they take it. So it's so funny because you can actually see the open position ratios fluctuate with these pullbacks. You know what I mean? And they get closer to neutral on the pullbacks always. It's really fascinating. It's only when the market really shoots up and goes really high that you'll see the numbers get way out of whack. We have like 80 or 90% traders, selling into the teeth of that uptrend, and then of course as soon as they get a little bit of profit or a little less loss, depending on how you look at it. I don't know where they get in at. Then they dump their position. So it's really kind of an interesting thing. I suppose you probably could use it as an exit, but I find technical exits for me are better. Yeah.
Hmm. Yeah, that makes a lot more sense.
Yeah.
So if somebody wants to try this, I'm assuming that the size of the broker matters, right? Like how many customers they have. So what do you estimate IG has?
Yeah. I have no idea. I know that
Yeah,
they're in
but they're a
they're in
big
England,
broker.
and they're in Australia, and they're in
Yeah,
England.
yeah, yeah.
I think they'll take people in Singapore and places like that as well. But the key for me, I probably shouldn't say this. The key for me is that I know people who trade, who are newbie traders in Australia, okay? And a lot of them trade with IG, okay?
Mm,
And I think it's because
okay.
they advertise a lot. Do you know what I
Yeah.
mean? They advertise a lot. They're out there. It's a really they have like this weird platform that, I actually tested it this year. I tested it maybe 10 years ago, and I tested it again this year. And opened up an account, took a trade, made some money, and I pulled the plug. I just wanted to see it, right? I just wanted to see what it was like. And also they had access to markets like options and things that I couldn't get
Uh,
with normal like Forex brokers. So I wanted to, you know what I mean? But yeah, so yeah, I think they're great. I think they're a great representation of at least in Australia, and I suspect in the UK as well, of just like new traders, which I think is
Mm.
really useful. Like I said, I wouldn't. I think there's a place called FX Blue, or there's MyFX Book. There's a bunch of these places where like traders go to get noticed, and I wouldn't use those because I suspect that you'll have a higher percentage of traders that kind of been around the block and they know what they're doing there because they're kind of putting themselves out there versus a broker where you could pull the data from. And I know Saxo Bank and I think Awanda, they all have offered that data. They just don't update it as frequently as IG, and they don't have as many markets as IG.
Mm.
So I like that fact too, because I trade a lot of markets. So I really like it's updated every 10 minutes, not every 15 or 30, and that it has so many markets there for me to look at. Now I won't necessarily use the indices data or the metals or things like that. I don't think it's as useful as the currency data, but I would use those data. I just have a higher bar, I guess. I'd want to see like
Mm.
85% on one side for the metals and things like that. And also the indices have an upward bias too, so it's a little bit weird, like uh but anyway, I think it's awesome. I think it's a great tool to see the inside of the psychology because it's it's like the canary in the coal mine. The newbie traders' feelings and thoughts about the market are so valuable because they tell you so much about the crowd psychology, I believe. And so to me it's just a really cool tool, and I found them to be really useful. And they've kept me out of some really bad trades. I've also, avoided some trades that I probably should have taken, but because I relied so much on the open position ratios, I didn't, it was a bit, I didn't have as much conviction, so I didn't take them.
Mhm.
So that's true too. But by and large, I say it's been a positive, keeping me out of like bull traps and bear traps and things like that. So I find it useful. Yeah.
Cool. Does IG have a weird like lot sizing thing? I think I remember that they were not quite nano, but they were like in
Oh.
between a micro and a nano or something like that.
Yeah, they're not. They're not. They have a I when I traded them in June, I was trading the S&P and the Nasdaq. Um and I was gonna get some options as well, which I did. I did, but so my so yeah, so let's put it this way. In my uh trades, you could only trade, I think, a dollar. The lowest you could go is like a dollar a point, like on the
Mm,
Nasdaq and the S&P, right?
mhm.
So you couldn't trade for like 20 cents or 10 cents, that sort of thing. And the options are really expensive too. You have to put up like a huge margin. So that's,
Oh,
what I mean? That's not for everyone.
yeah.
But uh, they have things like just things that you don't get at a lot of normal brokers, like um lots of indices. Um, yeah, and then then you can trade options like out of the money options, or I mean, it's really good, I think, if you're looking to trade options, or I mean, they have DAX, they have everything. Yeah, they have a lot of markets that I mean, I guess a lot of forex brokers now have like Hang Seng and DAX and things like that. But
Mm, mhm.
yeah, I mean, I don't like. I mean, the leverage is pretty weak, so you can
Yeah.
find better leverage other places. So, but that's kind of the case everywhere, I guess. Unless you go with a really dodgy broker, you're going to have pretty low leverage.
Mhm.
So, yeah, yeah.
All right. Cool. Thanks, Walter.
Thanks.
Oh, you want to talk about like what US traders can do to get more leverage?
Yeah, sure. That sounds great. That's great. Yeah, that's great.
Okay. All right.
All right.
1, 2, 3. Hey, Walter. So this is a question I get a lot. You probably get this a lot also. What is something that US traders can do to get more leverage with their Forex trading? Because a lot of higher leverage brokers won't take US residents.
Yeah, that's tricky. Well, you can move. You can move from the US, right? Okay, and that's not for everyone. You could also find the dodgy brokers that will take
Mhm.
US residents. The issue with that is that they're almost always going to be in a place like in the Caribbean or Cyprus or somewhere where it's
Hmm.
like really low regulations, and it's where all the crazy scam artists hide. So and they will occasionally be like you'll get the rug pulled. It's
Yeah.
happened to me with one of the Caribbean brokers. Luckily, it wasn't a big account. It was more of a test account I was using. But yeah, I mean, that's the thing. So, what I would do, okay, this is what I like to do. If I'm using one of those high leverage brokers, is I use a smaller account because it's the equivalent of a larger account in a sort quote normal uh broker, right? So if
Hmm.
your normal broker is giving you 20 to 1 and you go to your other broker and they're giving you 200 to 1 in some dodgy, Caribbean regulated broker. So if you put a $3,000 account with them, that's like a $30,000 account with your, you know what I mean? So
Hmm.
to me that is great. And so especially if you're trading aggressive strategies, um you can do that quite easily. In other words, like if you have lots of positions that get stacked on or something in your strategy, that sort of thing. I like using those brokers for that stuff. But you know, I would generally pull profits. Like I would try and pull my
Often.
profits to try, yeah, to
Yeah.
try and get to the point where so if it does go pear shaped, you end up with maybe break even or better, depending on how long you've been trading. What's been your experience?
Yeah, I mean, same thing. I use a couple of dodgy brokers, right? But 500 to 1 leverage, and I can get hedging, right? Which is important to me.
Oh yeah,
So
yes.
yeah, but yeah, another option that I haven't actually done, but some people could look into is you can get like an e-residency for countries like Estonia. I think Latvia has one. There's a couple others that are pretty reputable, and you can set up a company in that country, and then you can trade through that company. So I have a friend who owns a brokerage in Sweden, and he said, "Yeah, if you set up an Estonian company, no problem. We can trade through us, right?" So that's another option. I mean, there's a lot more involved, obviously. Like you have to maybe find an agent in that country and get your
Mhm.
mail delivered and all that. But that's definitely an option also if you're really serious about it and you want to go about it in like a more legal, like above board kind of way. Um, that's something that you might want to look at also.
Yeah, that's fascinating. I recently was speaking to a trader who said there was like I thought this is what I thought you were going to say actually. He said there's like this e country. When you said e residency, I thought you were going to talk about there's like this e country where like you can sign up. It's like a digital country. I don't know if you heard anything about that.
Oh,
So
okay, yeah,
like
yeah,
these
yeah,
people are they're basically like getting passports for this new country that's like a do you know what I mean? Like an internet-based country or something, and
yeah, yeah.
it's kind of a interesting approach. I was like, "Wow, that's." I think they're still kind of working out the kinks. Like from what
Mm,
I understood, it wasn't really like fully rolled out. They were in stages or something, so it was really I don't know. It didn't seem appealing to me, but it was just interesting. Yeah, yeah.
yeah. It seems like really early days, right? Like I also have an e-residency with Liberland. Have you heard of them?
Hmm.
So
No.
they basically took over this little island in the middle of a river next to Croatia and that other country, and they've been fighting the Croatian police and all this kind of
Really?
stuff. But they do have like some treaties in place and some UN presence and all this kind of stuff. And
Wow.
apparently they're starting to build. But obviously, since they're on a little sandbar, basically, right? They don't have any banks or anything yet, so you couldn't trade out of that country. But I
Ah,
mean, these
yeah.
types of things are coming up, and it is interesting to kind of see where this goes. I mean, it's really early days, like you said, so we can't really do much with it. But it's something to consider, keep an eye out on.
Yeah. Yeah. I mean, I would never. Yeah, I mean, personally, I would. I feel like they used to have like these islands in the Pacific where you could like have your own bank and stuff like that. But like all
Vanuatu and
that
all that.
stuff, yeah, all
Yeah,
that stuff becomes red flag though. Like, you know what I mean? It's like
yeah,
you do
that's true.
that and then it's like you're setting your I feel like you're setting yourself up. So I would if I talk to people, I generally will say I wouldn't do it. I would
Mhm,
just you know what I mean? Like if you're let's say you're American and you can't get access to good leverage. Well, what happens if you move to Canada? You know what I mean? Like,
Mm.
you know, can you get better leverage there? Or what happens if you move to Mexico? Can you get better leverage there? Or, you know, to one of the Caribbean islands, or, you know, if you're more mobile, or maybe you move to London. I mean, England has great rules for traders. You know, they have the
Mm,
whole
mhm.
what's it called, spread betting, and where
Oh,
it's
yeah.
like
CFDs
it's
and
like
spread betting and all that.
yeah, that yeah, I mean, we have CFDs and stuff that down here too. It's like it's really cool that you know, some places are just more accepting and kind of welcoming, and I feel like, you know, it's easy to get into some really deep doo doo if you if you go you know what I mean, too far down the like
Yeah, too far off the
I own my
shaft.
own yeah, I own my
Yeah.
own bank in the middle of the Marshall Islands or whatever. It's like,
Yeah,
I don't
yeah,
know,
yeah.
you know?
Yeah.
Yeah,
And that's why I think the e-residency is good because, you know, these countries like Estonia or whatever, they're well established. They have good banking, good technology. So could be a good
exactly.
option.
Yep, yep. Great idea. Thanks,
All
Hugh.
right. Thanks, Walter.
See ya.